So stock's been under pressure, flat out. We saw the market top in November, and we got a slight semblance of a bounce the last couple weeks, and it was more of an oversold bounce. And we can look at this long-term trend line in the SPY, the S&P 500 right here. We broke that trend line to the downside. We came up, we retested the area, and now previous support became resistance, and that's the area we ended up selling off from. So, I mean, the trend is still down. Stocks are under pressure. And now we're getting the headline theatrics with all the Russia-Ukraine stuff going on. Today we heard some wild news where stocks started viciously selling off midday after we bounced because the Ukrainian president alluded to an attack coming from Russia. Stocks viciously sell off for an hour or so, and then the president comes out and says, "Oh, I was just kidding." And stocks get bought back up. So that's the type of environment we're in, where everything's so touchy, everyone's a little nervous, quick to hit the bid, quick to sell. So high cash levels are definitely recommended in my point of view. Very difficult environment, very random. Something we saw today that makes even research on the weekend so difficult is we saw the U.S. we saw oil and we saw energy stocks ripping Friday on the back of the Ukraine-Russia news. If Russia wants to threaten the oil market and cut off supply to some areas and things like that. Supply goes down, demand goes up, oil prices are just going to continue to rise. So coming into the week, I was bullish on energy and oil names, and then what do we see this morning? Energy and oil names are the weakest sector, and then tech stocks, which were the weakest Friday, become the strongest sector. So that's the type of randomness we're kind of seeing in this market. Makes it very difficult to have any high conviction on anything longer than a few days right now. So definitely foot off the gas pedal. Definitely more of a research mode. What are you thinking over there, Bennett?
So just a couple individual sectors I'll run through. And this is, again, more on a longer term standpoint, not kind of day-to-day kind of swing trading. Yeah. So you mentioned like energy was weak today, which definitely, with you 100%. And just on the overall trend it's been in, it's very extended off its, major supports. But broadly speaking, it's still in this pretty strong uptrend and moving its way higher. So in the long term, it's like energy seems like a good place to be. In the short term, probably not the best. We saw the same kind of with utilities. In time, this utilities through their all-time highs. This 156 area looks very strong, but for now, again, it's pulling the support. Pretty weak. We saw the REITs, same thing. Coming near support, but another sector that's still looking pretty strong, relatively speaking. And financials, another sector that, again, just flagging your all-time highs. Again, this little bit of a pullback in this range, 10% range has been trading in. But these are still three sectors that have been pretty strong lately compared to some of the other ones. While on the flip side, sectors like the industrials have been a little bit weak lately and looking as if they're starting to kind of H over and they're going to want to test those prior lows that we saw a few weeks ago. We kind of saw the SPY, again, same thing, kind of pulling into that lower end of the range. And for now, 420 is the key level of support, but we don't really want to expect that to be this hard line in the sand that, like, if it comes down there this week or next week, it's going to hold it perfectly. You kind of have to expect to shake out in that area. And one of, I think, the biggest clues among all the sectors really is the telecom sector, which is probably one of the weakest sectors right now. But we saw this kind of head and shoulders pattern forming in kind of June to November. We saw that consolidation period. We saw kind of the two shoulders and the head forming, and then we saw it roll over and break down, and now which is clearly a big avoid. And we're starting to kind of see this similar pattern setting up in some of the other sectors, where even in the broad markets, we can kind of see a little bit of that left shoulder, and you can kind of call the head, right, that for the November to January kind of area, and then right now could potentially be that left shoulder or that whatever the right shoulder. But that's where it's, again, we don't want to say, okay, down to 420, the market's going to drop dramatically, but the telecom sector is giving us a little bit of some clues here that it had that big run up, it had that consolidation period near highs, which either is going to be a consolidation period to break out higher, or it's a topping pattern that breaks down lower. And telecom is kind of showing us what happened with them, and we're starting to see kind of some similarities in some other sectors. So, like you said, it's kind of research mode, it's kind of hands off, and just be patient and waiting for the easier trading setups to present themselves.